Rakesh Jhunjhunwala has this quote where he says that only make mistakes that you can afford. Definitely, there's going to be enough sophistication in the Indian markets soon enough when people will start wanting these kind of products. Markets were not that mature. People have got a taste of mutual funds. They've seen this massive bull run that has happened after COVID, and as they say, change is the only constant, right? You have to keep adapting. You have to keep changing. You have to build your portfolio first and then get into riskier assets. Jeff Bezos wrote to his shareholders, "We are building a decadal company. It's going to take 20 years for us to get to where we actually want to be."
Welcome, Gaurav. Welcome to Equentis.
Hi. Thanks for having me here.
It's a pleasure to have you here and pick your brain on some of the interesting questions that we have lined up for you.
Yeah, definitely.
So, Gaurav, first of all, we want to know your journey has been nothing less than very, very exciting in the past couple of years. How did you get motivated to pick this up? What essentially pushed you to look about in this category of investments?
So the story goes back to our college days in BITS Pilani when we started this. So me and my co-founder Mohit, both of us, were part of this club called the Wall Street Club in BITS Pilani, where we used to teach the juniors about the stock markets and how you can make money in the stock markets. And when you are in college and you, let's say, have like 5,000 to 6,000 rupees that your parents are sending, you sometimes want to invest that as well. And our seniors taught us, and we started teaching our juniors. And then we thought, there needs to be some kind of product around this, right? And back then, small case was coming up, where they were creating baskets of stocks for investors. Up till then, it was just mutual funds, and then there was this new array of products, of advisory products that were coming out in the market. And there was this buzz around algo trading as well back then. And I had recently started dabbling in tech. I understood that there could be tech products that could drive investments in the future, and it was happening in the West. In the West, we could see products like Wealthfront and Betterment, where you put your money in and it automatically allocates it into different ETFs and stocks. So we thought, definitely there's going to be enough sophistication in the Indian markets soon enough when people will start wanting these kind of products. Back then we were a little early. It was 2018, 2019. Not the markets were not that mature, but today we definitely see that people are going crazy for these kind of products because people have got a taste of mutual funds. They've seen this massive bull run that has happened after COVID, and they want to look at more innovative products in the capital markets.
So, would you say that Stratzy was essentially born during your college days?
Yeah, of course, it was born during my college days, and it was born in my hostel room, where a lot of friends got together and we started building from that place. And we actually have a picture of us coding in that room. And if you look at that picture, you will see everyone in that picture is doing something different inside the capital markets today. So that is pretty exciting, and that's where it all started. And we have been sort of working with different ideas and see what fits the Indian consumer best.
That's very interesting. I've been speaking to startup founders, and I really found the combination of having a business mindset and also keeping the consumer first. So I must congratulate you. I think the way you are progressing and the school of thought that you guys have, it definitely gives us a lot of confidence being in the industry that the category is definitely set to grow. So Gaurav, my next question would be how of course, in your college, you started about thinking, okay, how do we go about in the markets, and maybe the foundation of Stratzy was there. But when was the first time that you and your co-founder actually thought that, okay, let us give this finally a shape that we want to, and let's pursue this big?
So actually what happened was I was supposed to go for a research internship in Georgia Tech, America. And that's when the COVID-19 happened, and I was not able to go. And I had one whole year where, I was doing that internship remotely, and that kind of gave us enough time, me and Mohit both. So Mohit is from Gujarat. He came down to, Mumbai, and both of us rented out an apartment, and we sort of got a few of our developer friends together, and that's where we started building again. And we thought that this is something that people are even ready to pay for, and that there is a substantial revenue pool that could be tapped into if a good product comes in this market. And that's how we started.
Interesting. And could you also talk about your biggest challenges when you started essentially giving this strategy the shape that you wanted it to be in? What were your challenges, or what were your thoughts? Will I make it, not make it? Or what was the biggest thing that was going on in your mind that if I make this, then we are sorted?
So the thing is that we are fresh out of college, so there's not a lot of perception of risk that we have. We don't have that many responsibilities, or we don't have a job that we have to leave to chase this dream. So the risk perception was not that much. But the challenges that you talk about are actually, there are fresh challenges that come up every week. As you scale a business, initially we did not pay a lot of attention to risk management, which is very important in this business. So we built a lot of things around risk management. Today we are building a lot of things on how the execution of the orders will happen, and how it should happen in a staggered manner so that the market is not affected. So the challenges keep changing, but it's always an exciting journey.
So I think, for all of you, the key takeaway is that, of course, when you have nothing to lose, you have a lot to gain. So take those risks. If you have a great idea, make sure that you work with that idea and give it a shape. On your strategy positioning now, what makes Stratzy stand out? What is so special about Stratzy that you are very proud of?
So actually, I myself am a super user of the app. I love what we have built. I use it for all my investments as well as all my trading needs. What I'm actually proud of is that we have been able to serve every kind of investor in the market. Like whatever your requirements are, if you are, let's say, a low risk player and you just want to put in gold and silver, we have a product for that. If you are a high risk player, you want to dabble in options trading, we have a product in that. And that is actually something that I'm proud of, the wide array of products that we are able to provide to the end user.
Nice. What's your vision, or what do you want Stratzy to be like? Is there any brand, is there any company that you feel that, okay, I want Stratzy to be of this size, this shape, or I want Stratzy to behave in a particular manner? What is your brand personality?
So one brand that we really look up to is Motilal Oswal. So believe it or not, you would say ki these are new age guys. They would be looking up to Zerodha or likes of that. But actually, we feel that Motilal Oswal has created that brand where they are doing something for everyone. We've been to their office, and it's like every floor is dedicated to a different purpose. And overall, they are very business focused, and they are also very new age. What I've heard is today 30 to 40% of their transactions are coming through algo trading, which is a very new age thing, but they have sort of pivoted fast and gone in that direction as well. So that is a really good brand to look up to for us as well.
That's quite interesting, because a lot of the conventional business models that have been built over years, a very few of them have been able to be agile and to change the way they move, or to alter their DNA, or in fact to have the strength to call the shots to alter the DNA. But yes, I agree that Motilal Oswal is one of those early trend pickers, and they really latch on to something which they feel has a lot of potential, and they work towards it.
And as they say, change is the only constant, right? So you have to keep adapting, you have to keep changing to sort of survive in these markets.
So Gaurav, coming on to, like you said, you are yourself a super user of the app, right? If you were to give one piece of advice to someone who's just started to begin, his or her journey in the markets, what would be that one piece of advice?
The one piece of advice is to first build your emergency fund. Do not start with investing just because you have some cash lying around. Make sure that you've got your insurance policies right, you've got your emergency fund set up, and only after that do you start investing. Then the first principle is to build a big portfolio, and only when you can afford to make mistakes in trading should you get into it.
When you say big portfolio, you mean to say diversify?
Yeah, I mean, diversified to some extent, but not super diversified. What I've seen is people, invest 10,000 in 10 stocks,
Ah,
right? So that is over diversification.
yeah, true.
And you know, I think Rakesh Jhunjhunwala has this quote where he says that only make mistakes that you can afford.
Hmm, hmm, hmm,
So that is very important. What people do is they start with trading.
hmm.
They start with the most riskiest asset possible because they want the quick money out of it. But that is not the way. The way is actually entirely opposite. You have to build your portfolio first and then get into, riskier assets.
So again, a piece of advice to all the young investors out there. I think what Gaurav also mentioned is ensure that you have your base sorted. Ensure that you have an emergency fund that can take care of yourself, take care of your families, and then of course scale up as your appetite allows. I think it's a very interesting take because more and more in the startup ecosystem, we're seeing that while the excitement and the adrenaline keeps them awake, but then after a few years it gets into sustainability crisis. So as is important to scale, it's also very important to have yourself covered, and that's the basic premise of being a good investor in the long term. So I think that's something that we at Equentis also propagate. The first thing is to protect your money, and
Right.
growth of the money follows, right?
Exactly.
Once you're able to protect your money and then see it grow gradually, like day by day and month by month. But I think as an institution, what we also propagate is that investment only happens long term, right?
Right.
While that might be slightly contrarian to what you guys are building, but definitely that's at the helm of technology.
Mhm.
But in the long run, right, if you're looking to literally create wealth, right, a stock increases 20%, 30%, or maybe 50% in a year, that's okay. I mean, things happen. But if you're looking to create wealth in the tune of 1000x or 500x or 2000x, you have to wait it out. You'll have to see the cycles of the market wherein there are ups, there are downs, there is volatility. But as
I think what is happening these days with the online brokerage apps is that you have that kind of impatience where you want to go into the app, you want to refresh and sort of just keep looking at your portfolio every day. Feel happy, feel sad, feel something, but just keep refreshing the portfolio and look where it's going. And what gets lost out in this whole thing is that you forget to zoom out. The important thing is that even on charts, when you zoom out, when you look at the 6-month graph versus the 1-day graph, you will see that, okay, the stock has actually gone up in 6 months. It's just gone down today. So that is, one perspective that is sort of getting lost out, especially in the younger audience, because, they have that impatience where they want to make quick money out of it. But, if something is going to go up by 50%, it might even go down by 50% on that same day. So you have to be very careful with these riskier assets.
No, that's again a very interesting takeaway. Like, I mean, generally in investments or life, you need to zoom out if you want to have a macro view and essentially enjoy, the journey. Because,
Yeah.
like you said, once you zoom out, you're able to see, what sort of growth actually, has happened over months or over years.
Yeah.
I follow a couple of wise people on, on some platforms who actually use the terms of having a decadal view of the market.
Exactly.
Right, not having a
Even if we look at Amazon and it's become this mammoth today. If you look at the first shareholder letter that Jeff Bezos wrote to his shareholders, was that you need to have a long-term view with us. We are we are building a decadal company. It's going to take 20 years for us to get to where we actually want to be, and that's how he has scaled the company. And he has a mantra around it, which is called step by step ferociously.
Yeah.
Where you have to scale things step by step. You can't, and especially in today's markets, what happens is something new comes along, for example, crypto or AI, and then everyone sort of latches onto it to sort of create that buzz and create that quick money out of it. But actual businesses are created in long term.
Yeah, this makes me remember, my retail days, and then when I now connect back the story to what we used to say in retail, fast fashion was something that literally was catching up with the youngsters, and it still is. And there are some great brands in the market, and all thanks to Zara for being the inspiration. But then, today being in the investment markets, I tell the youngsters that listen, investment is not fashion.
Yeah.
So don't follow the fads.
Right.
Follow the classics.
Mm-hmm.
So investment is completely contrarian to the way that fashion behaves, or you should actually look at that category in a way which is far more settled and far more longish view. Because if you get on these fads, right, like you said, crypto or something else, there is a very high tendency that you get distracted from the ultimate goal. I mean, there's always that quick success high that you get in making maybe a couple of thousand in a couple of days.
Yeah.
But then you get distracted from, okay, am I looking at creating long-term wealth?
Mm-hmm.
Am I looking at something something as short term as maybe a couple of thousands?
Mm-hmm.
So I think that's a good way to look at how you're shaping up the product. And I'm sure you're building these back into your platform, right?
Yeah, definitely. So what we look at is we look at user trends, we look at what user wants, but at the same time, what user wants might not necessarily be good for him. And that's why we build a lot of things in-house for risk management purposes, right? When, for example, there are trading calls that, are given by multiple research analysts on the Stratzy platform. And if the user is taking the third trade of his day or fourth trade of his day, we nudge him. We say,
Nice.
try and avoid over trading, right? If we have seen, okay, he has already made 4,000-5,000 today, maybe take those profits home, right? Do not trade more, right? So there are these different kind of nudges that we give to the user when he is trading by himself. Then we have automatic trading tools that the user can set up, and all these tools try and cap the risk. People, how much ever you prevent them, would want trading tools. The only thing that you can innovate is in risk management of those trading tools, right? So, that is the philosophy that we have.
Well, that's very interesting. In fact, a couple of days back, I was exposed to a change in narrative by one of the leading brokerage houses in India. And while they stand for trading, but apparently the change in narrative was market is not magic, right? It'll take time for you to give those results that
Yeah.
I don't want to name them, yes, but what they are also trying to propagate is that essentially the expectations need to be set right?
Yeah.
If you are dealing with a 30-year-old who's got a decent job and has some decent money surplus to invest in the markets, if you tell him or her that, listen, hey, the markets can make you 50% in a year, I think that's a very, very risky proposition for a long-term understanding, right? Because once you start with that expectation, even a 15% or a 20% CAGR suddenly, makes like no sense to you.
Exactly.
And that's the trap that, once you get into, it's really, really hard to get out.
Yeah.
So I think it's a good development or maybe change in the narrative at an industry level, what we are seeing. Okay, Gaurav, now tell me, how do you balance, your work life, which I'm sure would be far more demanding as of now because you're building this up from scratch, and your personal life? How do you strike a balance?
I think as founders, we don't really think about that as much, because whatever you do at the back of your head, you're always going to be thinking about the business. You're always going to be thinking about, this user issue that has happened today. So even when, I'm out with my family sometimes, in the back of my head, it's like, okay, there are these few things that I have to complete by tonight because the market is going to open up tomorrow, right? So maybe work-life balance, not as much at this current point in my life. Maybe, some years later, that is something that I would think about.
Sure, but a piece of advice again, we keep meeting a lot of startup founders, and one thing that I tell them out of experience and the time that I spend in the industry, that it's very, very critical to maintain that balance. While of course the stages could be different,
Correct.
but you should be consciously aware that there is a life that outside of work. When I say outside of work, it does not necessarily mean that when you go outside of work, the work goes outside of you. The thought is not that.
Yeah.
The thought is that you should actually enjoy and give your brain that refreshing time or that download time so that you could actually think proactively and innovatively. I'll tell you that when I picked up running some 6-7 years back, the best of the ideas have come to me while enjoying my marathons, or the best of the ideas came when I was working out in the gym. So I think it's very important to give that breathing space.
That's true. No, actually, I do agree. What I do is I sporadically go for like swims, and that helps you blow off some steam. And what generally ends up happening is that you get fresher ideas. because again, it's about zooming out, right? When you're working, you're very zoomed in on that one issue or that one feature that you're building. But when you sort of go out and do other things, then fresher ideas sort of pop up into your mind, and those could then be put into execution.
Lovely. We'll slightly deviate now from being in the markets and talking about the market. Right, this category of algo trading or investments, I think, has blown up in the last 4 or 5 years. And of course, COVID is behind our backs, but we definitely felt the need of having a passive income. I think that's where the participation in markets suddenly sprung up, and brands who are in I'll not say brands, there are players in algo trading who've been mushrooming. What's your take on how do you differentiate from all of the stuff that's mushrooming in the market, and what's your long-term view for Stratzy?
So the way it has happened is that brands who do, or even players that do algo trading, are purely doing algo trading, right? What we have latched on to is the strongest engagement hook in the market, which is provide users with research reports, where you give them the view on certain stocks. The user will come to your platform and he'll be like, okay, I have this stock in my portfolio, let's see what Stratzy is saying about it, right? He will explore your platform, he'll look at all the different products that you have, and then he will come across these sophisticated products called algo trading. When you go after the very niche of the market and say, okay, I'll only do algo trading, then you attract a certain kind of audience. What we want to do is we want to democratize it in a way that you're coming to us for something much simpler, which could be a stock basket, and then we are sort of introducing you to these new array of products. Because what we have seen is that the algo trading part of the market is very much reserved to people who know how to code,
Yeah.
who have sort of come from the West and they have seen those products there. But what about the people who are just entering the markets? What about the people who are going to make mistakes? If they could be put into these sophisticated, disciplined way of making money, it's, I think, a win-win for everyone.
So again, I hear some what do you call, the basic principles very loud and clear. Having a zoomed out view, having that discipline in investments, having a long term view on investments. So I think across the category we've been hearing these keywords, if I may call them, and I think the onus is on us as the category builders and creators, that we not only ensure that we help democratize wealth creation in India through participation in the markets, but also propagate the right way to invest. Because I think shouldering a big responsibility as this, wherein only 5 or 6% of the population is exposed to the markets, we being a savings economy versus the West being a consumption economy, there is almost 50% participation in the markets in the US.
Right.
So I think that in itself is a irony that that has actually stopped people from participating in the markets because they didn't know how to go about it.
Yeah.
So I quite like that thought of that how important it is to have a disciplined approach, to have a long-term view, and more importantly, to handhold these customers.
And actually, you said that we have very little retail participation today, but I am just so optimistic about the future, because today we have a 21,000 crore ka SIP book that is coming into the markets every year, right? And this was just 3,000 crores a few years back. So there is just so much optimism about where the Indian markets are heading, and how capitalism is going to win, and it's going to create so much innovation in India. Because what you will see is that when more and more money comes into the market, it's not just going to go to the companies that are already there. It's going to create new companies, it's going to create more industries. And when the public invests in these companies, that's how you sort of expand the economy, right? So there is a lot of optimism, there is a lot of faith in how things are going.
So again, an important piece of advice for all our viewers is that if you're between 25 to 30, start early. Start your investments as early as possible. I mean, in most of the cases, you wouldn't be exposed to the nitty-gritties of the market, to the risks associated. You would want to have an expert partner with you, a trusted partner with you. And Of course, there is Stratzy, who's building a great platform for you to, leverage the tech strength. There is Equentis that has, that has immense research capabilities, can help you long term grow your wealth with some great stock picks, of course, backed by a lot of tech and primary research. But what our piece of suggestion is, whether you are with Equentis or you are with Stratzy or with anyone else, our piece of advice remains same. Look at the long term, ensure that you have a disciplined approach, be consistent, have clear goals, and then enjoy, the power of compounding, as we call it.
Right.
Any last piece of advice, Gaurav, before we wrap this up?
I think the last piece of advice will be, to everyone who's sort of on the edge about whether to start up or to, everyone has this one idea that they are waiting on. I think people should take that leap of faith because it does pay off. And as we have, spoken about, there's a lot of money that's going to come into the markets, and there needs to be a lot of innovation that needs to happen, right? Because, that is the way forward. So yeah, I think my last piece of advice would be to, take that leap of faith.
Great. So we will wrap this up here and leave all of you with that brilliant thought that Gaurav made about is having that courage to take that leap of faith whenever you feel very confident about something. And that applies to your personal life as well as to your professional life and your investment journey also.
Definitely.
Like I said, if you, I'm sure a lot of us do not have the expertise of the markets, do not understand the financial markets as such, but there are people who understand it and who actually are experts in that field. So like I said, ensure that you have a trusted partner with you while you are on this wealth creation journey. Trust them fully and see the magic of compounding with the markets.
Investments in securities market are subject to market risks. Read all the related documents carefully before investing.